What's up YouTube? Dougie Chong here. Welcome to today's YouTube video where I'll be reviewing DropBox stock. The company DropBox was founded in the year 2007 by one of the most prestigious startup accelerators in the world, Y Combinator. For those of you that do not know what Y Combinator is, it is a startup incubator located in San Francisco, I believe. They accept around 100 to 200 new startups every year. They connect them with a lot of venture capitalists, give them a lot of money to start up their ideas. My personal experience with the product DropBox started in university when all this cloud technology was just emerging. I remember some of my first university classes, I was writing them in pen and paper. Now granted, a lot of other students use laptop, but I kind of just liked pen and paper. I'm not that old, but that is what we used to do back in the day. For those of you that do not know what the product DropBox is, it allows you to make a folder on your computer and then it syncs to the cloud so you can access these files wherever you have an internet connection. So having your school files be available to you wherever you are truly was a valuable tool. There will even be a little icon next to each folder and file to tell you if it is synced and up to date. Now you might be wondering, wait, doesn't Google Drive or OneDrive already do the same functionality? The answer to that is yes. That, as well as iCloud, they've all been competitors of this cloud storage technology. It's important to note that DropBox was the first company to implement this technology and all the other big companies just copied them. But being the first company, I don't think it really matters too much for this type of product. There are also a lot of other smaller competitors such as Box. So how does DropBox really differentiate themselves? Well, one of the main differentiating factors is the ability to integrate with other services such as the Google services or the Microsoft suite. I also think the price of DropBox is slightly higher than Google or OneDrive because big companies such as Google and Microsoft can afford to lose money to gain market share. So that's not going to be a competitive factor when looking at DropBox. And the main reason why there's not much difference between these companies is because users are not really going to care whether their files are being stored by Google, Microsoft, or DropBox. They just care that they can access their files quickly. DropBox does claim to have slightly faster sync times, so for those people that really care about getting their files quick, maybe that is an advantage for DropBox. So what else can DropBox do to grow? Well, they recently acquired an e-signature company called HelloSign. I didn't realize it, but I first used HelloSign back in 2017 when I used to work at Foodora. They had you make a contract as a private contractor and they used the HelloSign technology. And just recently I had to sign another document using HelloSign. Now don't get me wrong, DocuSign is by far the leader in market share. I even use DocuSign to sign some real estate documents, but the fact that I've already used HelloSign twice within a very short period of time shows how much this company is growing. The e-signing industry recently got a bump due to the whole COVID situation, but really the world was trending that way anyways. Nobody really liked to send forms, print them out, sign them, scan them, and then send them back. That process was very tedious and was going to be replaced by technology. That's why there are tons of competitors in this space, from SignNow to DocuSign, with all sorts of different prices, plans, different templates, different UI features. But if you look at DocuSign's valuation, it's sitting somewhere at $40 billion, whereas DropBox sits only around $8 billion. DropBox branching out into the e-signing space really makes a lot of sense because a lot of the template forms that you fill out and sign have to be stored on cloud technology anyways. Also, the whole process of how e-signatures work revolves around encryption technology, and DropBox must have had to use encryption when securing their files. I'll also mention that I've been on the side of sending documents that need signatures on HelloSign, and it was by far a very good experience in my opinion. This is because while a lot of other products had a 30-day free trial, HelloSign was the only one to have a free tier option, which allowed about 3 signatures per month, and that was perfect for my low usage. The overall experience was pretty smooth. I was able to upload the document pretty easily, put the boxes where I wanted the recipients to sign exactly where I wanted, and it really worked out pretty well. The one complaint I would have is that we had a date field that I needed to have signed in a certain format, and HelloSign really wouldn't allow us to change that date format. I think it was like month, day, year, where the form needed day, month, year. It's a little thing, but something that could be improved. Another more qualitative aspect about the Dropbox company is that I heard Google Drive was poaching a lot of their engineers. That is never a good sign for a company. Now let's look at the numbers and the balance sheet. Since its IPO price of around $35 back in 2018, this stock has been on a steady decline. This story is very similar to Slack in that a lot of analysts see the big players such as Microsoft and Google completely wiping them out despite their products being slightly inferior and also copies. It's important to remember that Google tried to copy Facebook by pushing Google+, but that failed due to the details and the momentum that Facebook had already created. At the end of the day, people aren't going to care too much whether it's Google Drive or Dropbox that is hosting their files on the cloud. One doesn't limit functionality, such as using Google+ versus Facebook. Alright, looking at the one-day trend, it just shot up about 3.6% last Friday. What made it shoot up in one day? I'm not quite sure that there was a company-specific reason. More so, the entire market was trending upwards. The positive news about Trump's recovery might also have had a factor. I'm not quite sure. I did buy some Dropbox stock around $19. I was a bit greedy and wanted to drop a bit more before buying more shares. I typically don't like buying stocks when they shoot up 3% in just one day, but I may have to make an exception for Dropbox. Zooming out to the 1-year chart, the stock really hasn't done much. It hovers around that $20 mark, sometimes going a bit higher or a bit lower. And if we look back to the IPO, it started around $35 before zooming to $40 and ultimately crashing to around that $15 or $20 mark it is today. That's the interesting thing that I've seen with IPOs. They almost always are overvalued and drop as soon as they hit the market. This kind of makes sense since the company's founders want a good deal when they bring the company to the market. But that is why IPOs are always dangerous, whether it is Facebook or Snapchat. I've always seen an initial increase followed by a sharp drop. But if the company is really a solid company fundamentally, such as Facebook, then it will be able to recover. That's why even though I'm interested in a company like Palantir that recently IPO'd, I will wait a bit before investing. That being said, if you're able to buy the stock at the special price before it is available to the public, it seems you are always able to make a quick buck on the initial hype. Now let's look at the market cap. The market cap of Dropbox sits at a paltry $8.4 billion, whereas an e-signature only company with no cloud storage at all in DocuSign is valued at $41.7 billion. That shows how massively undervalued Dropbox is, because HelloSign has pretty much the same feature set as DocuSign and can grow in a similar fashion. The PE ratio is a ridiculous 257, very high even compared to other tech companies like Amazon, which sit close to 100. But this high PE ratio is because even after being around for many years, Dropbox is still growing extremely fast year over year, I think close to 10%. So is Dropbox a buy in my opinion? I'm gonna have to say that it is. It's not a strong buy or a clear-cut buy by any means, just because the competition is so fierce. But based on its low valuation, its strong online cloud storage and e-signature products, and the fact that it is still growing pretty fast year over year, even after about 10 plus years being a company, I see very high returns in this stock. But again, that's just my opinion. I am not a licensed financial advisor. This is not legal financial advice. That's it for this video, guys. Hope you enjoyed it. Leave a like if you learned anything at all. Feel free to leave in the comments what you think about DropBox, or if you have any other stock you want me to review. Enjoy the rest of your day and see you in the next video.